So this is our top story. Federal Reserve Chair Jerome Powell spoke about the state of the U.S. economy just moments ago. We want to go straight to Chicago and Yahoo Finance's Brian Cheung, who was there listening to the speech. What is the key takeaway, do you think, Brian?
Yeah, well, two big key takeaways. First is that he did share a little bit on trade, and then he also talked about what the long-term vision is for the Federal Reserve as it embarks on this review of its monetary policy tools, strategies, and also communication. But some interesting remarks that he actually kicked off his speech with, talking about trade. I want you to play that spot right now.
I'd first like to say a word about recent developments involving trade negotiations and other matters. We do not know how or when these issues will be resolved. We are closely monitoring the implications of these developments for the U.S. economic outlook, and, as always, we will act as appropriate to sustain the expansion.
So obviously, trade's still on the mind of Fed Chair Jerome Powell, saying that the Fed will continue to monitor the developments on trade. But the later parts of the speech talked about what is going to be discussed here at the conference over this two-day conference today and tomorrow on a number of issues regarding how the Fed should be targeting its dual mandate of price stability and also maximum employment. A number of papers scheduled to be presented here that provide a number of different suggestions, providing some options for how the Fed can tweak, for example, its targeting strategy with inflation. The Fed has had a 2% target since 2012. It will continue to have that target going forward, but there are tweaks in the way that the Fed pursues that. Maybe it uses something called nominal GDP targeting. Maybe it uses something called average inflation targeting. It seems like everything is on the table right now as Fed policymakers like Fed Chair Jerome Powell meet here in Chicago to talk about those issues.
Yeah, and the market seemed to like that. Thanks so much, Brian. And we're joined by today's panel now, Bruderman Asset Management Chief Market Strategist Oliver Pursche and Yahoo Finance's Sabile Marcellus. So did Jay Powell effectively here, Oliver, confirm kind of the market speculation that we're going to see cuts, or do you think that's reading too much into it?
No, I think that's exactly what he's done, and we had some speeches yesterday that talked about potential rate cuts as well. Look, I mean, the Fed understands that this trade war is really starting to impact the U.S. economy. We've seen it in virtually every leading indicator out there. And what Fed Powell said today is, look, let's put politics aside. If we need to act, we will act. The problem is that historically, the Fed has always been late. Right. So we're seeing it already. By the time it acts, even if it were to cut interest rates tomorrow, it'll take 4 to 6 months to start really impacting the economy. And that's going to be too late.
And so when you say that you're expecting the rate cuts, what is the chair signaling to us when he said, quote, "We take seriously the risk that inflation shortfalls that persist even in a robust economy could precipitate a difficult to arrest downward drift in inflation expectations"?
So it's really talking about deflation or stagflation. What he is saying is, and you mentioned it in the report, or it was mentioned in the report before, about kind of average inflation target, meaning that it can run a little hot or a little low for a period of time, and that's okay because it averages out to 2%. That's something that economists, generally speaking, hate. Because what it means is if you're running low for too long, you got a deflationary environment, and that can be a death spiral. And we saw that in Japan in the 80s and 90s, and even today to some extent. And so that's really what the Fed wants to avoid.
I wonder if they can. That's the question at this point.
Yes, absolutely. I mean, it's really about the trade wars, and we're fighting it on multiple fronts. And it's dealing with European Union, it's dealing with Mexico, and it's dealing with China. And the Fed is really looking at the bond signals, what's happening there, and bond investors being really concerned about what they're seeing in terms of the inverted yield curve, in terms of the yield on treasuries long-term falling below yield on treasuries short-term. And usually that signals that there's going to be a cut, and then there's going to be a recession, which is worse.
There's pressure on the Fed because of what we're witnessing in treasuries. But why do you think the chair went out of his way at the very beginning of this speech to talk about the trade war? Because he has no say in the trade policies of this country.
Yes, because he's trying to, I think, calm investors a little bit, saying, you know what, we are paying attention to what's happening with the trade war. Obviously, it depends on President Trump and what he's going to do. But the Fed has a meeting later this June. But afterwards, towards the end of this month, is the G20 summit. So that will actually give the Fed an opportunity to see, will these world leaders actually find some kind of resolution when they meet face to face to resolve this trade war?
Just to back up for a second. I mean, and you mentioned this in some of your notes to us today, how different the sentiment is from, say, a month ago, right? Is it that people just didn't fully realize the effects that this trade war would have? Are they overstating it? I mean, what's going on here?
I think, well, they're not overstating it. Okay. So what has happened is this has been going on with China for effectively 18 months or 15 months, 16 months. And you're now starting to see it impacting. You know, in March, the numbers were great in terms of the economy. In April, they were still pretty good. They were mixed, but pretty good. And then they took a nosedive. And that's what happens, and that's what Powell is so worried about. He's worried about, after Trump tweeted that he's going to impose additional and new tariffs on Mexico, that's going to blow up that trade deal. And let's not forget, I'll call it NAFTA 2.0, but it's the U.S., Mexico, Canada trade agreement, whatever, USMCA. That has not been ratified by Congress yet. And so that's really, really important. And you don't want this thing to fall apart. So Fed Chairman Powell saying, look, we've seen data take a nosedive here. We're still kind of okay, but it can't get much worse. Let me do whatever I can to calm markets, to calm politicians, and to try to bring people together. And let's not forget, according to a recent report by Deutsche Bank, this whole thing has taken $5 trillion off market capitalization worldwide. I mean, that's a boatload of money.